There we go. All right, beautiful stuff. Greg Johnson, always such a pleasure, sir. Wealth of knowledge, man, the myth, the legend of the lending business.
Thank you.
Floor is yours, sir.
Thank you. You guys seeing my shared screen with the handout? Take it. Okay. I'm going to hit the banking industry, which is our number 2 objection, but it seems to be the most common that I'm hearing these days is it a good time to buy or refinance? And there's a lot of concern that's out there right now with regards to banks that are failing. And I'm not going to discount that. You know, I think from the standpoint of what you hear about in the news and the media, there's a lot, the fear factor looms large. And in fairness, I mean, even the standard news these days largely is filled with just, you know, devastation, destruction, problems, you know, on and on and on. So it seems like that's maybe what the media is covering largely anyway, but I'm just going to talk just, you know, if nothing else, to try to, you know, wrap your head around what's happening, why it's happening, how does it affect us, you know, what the hell's going on out there, and put some people at ease, quite frankly. So the news from last weekend, if you've just coming out of your proverbial rabbit hole, a couple big banks got rolled last weekend and failed altogether. And we're talking the second and the third biggest failure, largest bank failures in the history of the US. So we're not talking about small institutions. We're talking about hundreds of billions. And like, what the heck? You know, how all of a sudden does this stuff happen? What on earth is going on? So, you know, there are people out there that are concerned about the economy and is it a good time to move forward with real estate? And then the second you get this quote unquote double whammy, or triple whammy for that matter, with a couple banks failing, puts a lot of nervous anxiety in the market, would be an understatement. So who's kidding who? So today, and it isn't a special meeting, but the Federal Reserve has what they call Federal Open Market Committee meetings. And it's when they meet to discuss their monetary policy. And today was the big day as far as the next meeting goes. And there was speculation about a month ago that the Federal Reserve is going to increase rates quite a bit to try to curb inflation. So the higher rates go, the more expensive the cost of goods are. Hopefully we can reduce, you know, the price across the board, reduce inflation, and get to some kind of more of a medium. So what does the Federal Reserve do in its entirety is they're looking for steady as you go. So the Federal Reserve is looking for kind of very, very small swings up or down. They're not looking for any huge achievements or failures for that matter. They're trying to control our monetary policy and keep everything very, very consistent. So there's no fluctuations in our financial markets. So having said that, the Fed increased their benchmark rates today by 0.25%. Happened at 11 o'clock our time, was the start of the meeting. So it just came out, was just announced. It was expected to be as high as 0.75 point. You know, upwards of 2-3 weeks ago, before the bank failures, the contention was we're probably looking at a 0.75% increase, which is in line with everything that we had last year. So continue just up. The bank failure, and as rates are going up, and in kind of a reverse measure or move, as rates go up, the treasury, the treasury yields and treasury bonds, the rate that they pay come down. As rates come down, the treasury yields and those bonds go up. So they kind of go in reverse to one another. So if I had to, in very, very simple terms, and a couple of the banks that failed, one of them was in Silicon Valley. Silicon Valley Bank, doesn't take much to realize where they're located. But they were the first one to get rolled. And they had a lot of startup depositors, a lot of money coming from the tech sector, a lot of venture capital money. The other bank that got rolled was in New York, largely New York City, is Signature Bank. Much the same. A lot of new money, a lot of venture capital money. The acronym VC for venture capital is basically high yields for kind of a quote unquote if come. You know, you get a great return on your investment if all this pans out and everything works out the way that we'd otherwise like it to. But it's much more risky in its approach. What I would say about each of the in more volatile sectors and the hundreds of billions of dollars they have is not coming from grandma and grandpa's savings account in Des Moines, Iowa, or sitting, in small markets. I'm in Sioux City, South Dakota. They're not as heavily affected by any means, to say the least. The Federal Reserve has come in, the government in general has come in and said, nobody's going to fail. So they're going to step in. When the Dodd-Frank Act occurred back, coming on like 13 to 15 years ago, the onset of the Dodd-Frank Act that happened after the downturn in 07, 08. There's a lot more federal regulation in the industry, and banks needed to increase their FDIC insurance. So basically every bank out there had to increase that piece of what they retain on their books and their balance sheet to be more conservative and offset any risk that might occur. So there's a lot of foresight that went into that. I'm not going to discount it, but like I said, the government's come in and said, we'll take over any bank if we otherwise need to. And really, in essence, right now, and why there's failure is as rates are increasing, the treasury yields are decreasing, and the banks that are failing, quite frankly, invested money in these treasury yields last year. When money was up, the yields were great, rates were lower, or in 2020 and 2021. And now that the pendulum has swung the other direction, they're absolutely eating it on the yield spread. So they're losing money on these investments, and the nervous anxiety on the street is creating these depositors to withdraw money, and into the tunes of a lot of it. So without that liquidity, they can't hang. They're losing at too great of a rate. And absolutely, those couple that have already fallen by the wayside happen very, very quickly. So the Signature Bank in New York City actually was the third largest bank failure in the history of our country. So these are not to be understated. These are really big deal. What I'll say from our federal government and the ability to take over the banks is basically they can take them over, hold on to the assets, wait for things to rebound, regain value, almost equivalent to 07, 08 when property values were tanking. We're going to go ahead and retain the asset, wait for values to appreciate, get back to a level playing field, and then we'll basically let them take over the reins, for lack of a better term. So from the standpoint of the U.S. Treasuries, and in comparison to what occurred in the past, is the downturn in 07, 08. And there are a lot of people out there that feel we're headed right back in 07, 08. Not going to happen. It's not going to happen. 07, 08 was driven by foreclosures. It was driven by a credit crisis. And that's really it. There was a lot of really sketchy loans that were done. If you had a heartbeat, you could get a loan back in the day. That was really it. I mean, it was painstakingly easy. From the standpoint of today and what's occurring in the crisis is largely balance sheet driven. It's not a credit crisis. Banks are just caught in a rock and a hard place and have basically moved money into assets on their balance sheet that are losing their ass. And when people are withdrawing money, they don't have any liquidity to hang in there and continue to operate. That's really it in a nutshell. The larger banks have not invested so much into the treasury yields. They've diversified themselves on a much greater level, to the extent where, the reality is they're going to be able to pull through at a much greater clip. 08, 07, 08, to put things in perspective, we had over 600 banks in the United States of America fail. 600. Right now, we're talking so far 2. And I'm not saying it's not a lot of money or it's not hundreds of billions. Could there be other ones that are coming behind him? There could be. I'm not sitting here saying, oh, everything's fine, no problem, no problem. There's no issue. But the reality of things is, from the government standpoint, they're not going to let them fail by any means. So, like I say, as these yields come up, if they have to take conservatorship and take over a bank, they otherwise will. But there's no way, no how that our federal government's going to let anything, kind of roll into that otherwise free fall. So it's kind of a temporary spot. The Federal Reserve wanted to increase rates. They wanted to increase them 3 times more than what they did. Here's a little pop-up on my screen. You're seeing market improvement. Rates just went up 0.25%, and lenders are already showing betterment to rates. Okay, so it's not like, oh my gosh, everything's cratering. I'm losing my business. I got to go find another career. Not even kind of. And if nothing else, anybody that's been in the industry for longer than a minute or two, I mean, welcome to the normal market. We've been preaching that for some time now, a better part of a year, because those folks that have been in the industry for 3 years or so, it's just so unreasonable and unrealistic. It's just not, not the norm by any means. So the good time to buy or refi, this number 2 in here, in fairness, in my reply on any of that would be, what's the motivation? The good time to buy, most people out there have no concept of the benefits to home ownership, even when it comes to your IRS tax returns and the write-offs that you get. I'm not a tax preparer. I'm not going to sit here and say, let me do the quick math and based on your income or taxable income and your tax rate. But what I do know in very common sense terms, number 1 is that the IRS has a lot of lucrative write-offs for people that are homeowners. UWM rates are coming down here too. But from the standpoint of write-offs, you get to write off all your mortgage interest. And for a median priced home that's sitting with like a $450,000, $500,000 mortgage, very modest, your mortgage interest is going to be in the mid 30,000s a year. So you're talking about, arguably, somewhere in the 35,000 or so to reduce your taxable income just for the interest, plus your property taxes, arguably is another $7,000-8,000, plus your homeowner's insurance. So you're arguably up into the low to mid 40,000s to reduce your taxable income. And that's in comparison with the IRS gives you in a standard deduction, which is nothing. In simple terms, for just a middle of the road buyer that was a renter going into homeownership, arguably is somewhere in the $12,000 or so extra cash in hand every time they file their tax returns as a result of being a homeowner in comparison to a renter with the standard deduction the IRS gives you. You can contact your tax preparer if you think that, who is this Greg guy? He's full of it. He's telling me he's not a tax preparer. Why should I take his opinion on anything? You want to talk to your tax pro, yeah, I encourage it. If you want to get the truth from them, absolutely. If you wanted information on estate planning, who the heck am I? I'm not an estate planning attorney. Contact somebody that does that stuff for a living. You want information on the mortgage industry? Hey, I'm your guy. You want invitation or information on real estate? Heck yeah. I mean, we have some solid, hardcore, knowledgeable, excellent people to go to. But know your strengths and weaknesses. So from the standpoint of just the tax benefits that go into it, it is whopping. And if I said it was $12,000 a year, for most people that are out there, they do not get annual bonuses that are equivalent to that $12,000 or so per year. It's not normal. They're not used to it. They had no idea that would even be an upside, benefit that goes into it. So yeah, the good time to buy or refi, I would always look at the motivation and then take advantage. I'm not going to say manipulate, terrible word, but take advantage of what their motivation and what they're geared for. Are rates going to come down in the future? Heck yeah. It's just a matter of what time and what day. Are they going to be able to refinance and get a better rate sometime down the road? Yes, absolutely. Are they always going to have this payment? No. If they have mortgage insurance now, are they going to go to their grave with mortgage insurance? If they live a nice long life, no. They're going to get rid of that too. So always good time to buy a refi. I wanted to dwell on that number 2 more so than anything else on this sheet, because that's really what I'm hearing most of. Most of the pushback is, yeah, God, I don't know if you're seeing the news and reading what I'm reading, but man, the sky is falling, and that seems to be, where a lot of the media posts and naysayers, and it's just not the reality and the fact of the matter. All right, so I'm not going to certainly labor on all these other points nearly as much as I did on number 2. But dropping into number 1, what's your rate? It's actually one of the most common questions that I get asked historically. Everybody wants to know what the rates are. Everybody thinks you got a quick answer for them, and everything comes down to your individual situation and circumstance. So it's equivalent to, you walk into a shoe store. Why is it that they have so many different styles of shoes? And why is it that they have so many sizes of shoes? Because everybody's got a different preference. Some people got really little feet. Some people got really big feet. Some people want a certain look in comparison to others. Some people want a warm weather or a colder weather shoe. Who cares? Pick a winner. Why does Baskin Robbins have 31 flavors to appeal to the masses? Some people aren't going to like the bubblegum ice cream and think it's nasty. Other people I just like the vanilla. Pick a winner. I'm making the same money on every scoop that I sell. So, I mean, from the standpoint of what it is that we offer, the rate is based specifically on what is the client bringing to the table, what are they seeking, and basically I'm going to create something much like the proverbial shoe salesman, retail clothing store. What are you looking for? If you came into my men's clothier store and you said you needed a tuxedo for an upcoming wedding, I'm dialed in. Now we're narrowing the scope. So the entire rate thing is just, what are you looking to accomplish? And that's what's your credit score, what's the purchase price, what's the payment, all the parameters that go into. I'm not going to dwell on it. So excellent question. What's the rate? Tells me that you have interest. That's 90% of the battle today, is to create some interest and some excitement. So the fact that you even have some interest and want to know, hey, man, wonderful. Let's see what's in your best interest and start gathering info. The number 3, my credit isn't that good. I really impress upon people to run credit profiles, see what we've got. We're absolutely willing to partner up with you, work with you. We have programs that can look at what does it take to get your score up? What do we need to do in order to get to where you want to go? And I can give people a roadmap. And really, for the most part, number 3, more than 50% of the time, the credit is sufficient to qualify for the loan that people want. People tend to beat themselves up in their credit profile and well, yeah, problem here, problem there. And past history is not the case. You get into credit issues that, arguably a year and a half, couple of years or older, really doesn't affect your credit scores and your credit profile much. The savings pattern number 4, you got to just bank on the fact that we got down payment and closing cost assistance programs. I've had a lot of people ask me about a federal grant that I'm seeing in social media. I'm seeing in some news clips that's coming out. I've seen some people mention $25,000. I've seen other people mention 20% or 25% of the purchase price. I haven't seen any of our lenders offer guidelines on it yet. I've seen dates that are coming out Monday the 27th. I know that the program, there's something that's coming around the corner. I talked to an agent out of our Canyon Lake office earlier this morning, and I mentioned to her, I have it out to every one of our lenders. As soon as I have information on the program, I will let you know. I'm overly certain that it will have certain guidelines. It's not going to be for every person out there and there's just free money, come and get it. And one of them is probably going to be maximum income limits. It's probably going to be geared towards people in a more modest median income level. Number 5, the whole long-term job fee. I mean, you really got to look at the unemployment rates and the job market, but anybody that's concerned about their job, unless you are in such a specialized field, there are so many opportunities for employment that are out there. I'm really hard pressed to say that there isn't arguably a job for anybody, and no slight on those that are less fortunate and or might be jobless and or homeless that are out there. But it just seems like there's so many opportunities. Where there's a will, there's a way. And the unemployment rate is so low right now. I mean, we're literally sitting on like a 30-40 year all-time low. Number 6, how long does the process take? If we as loan officers do our job well up front, we're closing deals in 10 to 12 days. We can do it in single digit days if we get an appraisal waiver. So when I say do our job well, we have proof of all income, proof of all cash for closing. We got a credit report. We firmed up their approval. Man, we can hit the ground running. You can close as fast as you otherwise want to close. I just need to be able to get the buy-in and get the information from our clients. Is it any quicker with banks or credit union? Hell no. 60 days, you'd be lucky to get done in 60 days. Your branch banks that are out there have no, I mean, God bless them, but there is no sense of customer service on that level. And they're basically paper pushing, and their turn times are terrible. And you have no sense of security. Every time you talk to anybody at these larger organizations, you got a new person. Every time you pick up the phone, you got to retell your story. With us, you got a primary contact throughout. I'm not going to dwell. I spent this with loan officers, family members in the business. I'm not going to dwell on that with you guys. Bank or credit union has any better rates? Number 8. I love an opportunity to compete. Me, like a lot of people that have been in the industry for a long time, real estate and loans alike. If you've been doing this for a while and you are successful, you are competitive. You have to be. There's no way you can succeed in our industry without being competitive. So from the standpoint of us putting together and competing against anybody, love an opportunity to chop anybody off at the kneecaps. All I need is just an opportunity. The number 9, do I have to pay any money out of pocket? Goes hand in hand with number 21. We'll have to pay upfront credit report or appraisal fee. So I'll just touch base on each of the two. Up front, we got to get somebody's authorization to run their credit report. We do ask as a company for people to pay for credit reports. Do they have to? No. Could our loan officers pay for them? Yeah. I'd ask a client to pay for an appraisal fee too. Do they absolutely have to in order to fund the deal by some federal regulation or law? No. Could the loan officer do it? Yeah. You know, so it all just comes down to whatever is negotiated up front. And I think largely if things are communicated well into the middle, I mean, hands down, if you're coming to me asking to borrow hundreds and hundreds of thousands of dollars for a mortgage loan, you know, I would like to think that this number 9 silly little credit report and or appraisal fee is not going to be an impasse. But I will work through that. That's not going to be a deal killer. The competition, they say, you know, I don't have to do it. And I'd feel much more comfortable if I didn't have to pay for this upfront with you too. We got to take a long look at it. Sometimes we got to, you know, take it on a flyer and put our best foot forward to make it happen. I'm not going to say that that's normal though. The abundance of paperwork, number 10, is the same with anybody else that's out there. So it's not like we're marching to some different beat than someone else is. Everybody needs all the proof of income, all the proof of assets. I mean, if whatever the source of income you have is going to dictate the paperwork needed to support that. So there's no more, or at the end of the day, really no less. We try to run the automated approvals up front on number 10 to see maybe there's some things that we wouldn't need. The automated approval comes back and says, hey, you don't even need that other year tax returns. You only need 1 year. So we'll try to minimize what we need based on the approvals and the programs people are seeking. Number 11, and everybody wants to get a deal. What do you charge? What do you got? How many points? Same in real estate. You want to list my property? What's your listing fee? You know, to go back and just say every single person's can be the exact same number, you can try to put everybody into the exact same bucket and you're going to lose business. You can negotiate with people along the way and you're going to win business. Sometimes people like to know that they got the upper hand. If you go in on a 3% listing agreement and think that it's going to be this or nothing, you know, the reality is maybe you don't get that. Maybe it's closer to 2.5 or 2.25. And I know that the stats in what I read and talking to knowledgeable people like Robert and the like, that's at 2.25 is average. But you can start in high and negotiate down. You know, from our standpoint, with regards to points and fees, you try to get everybody a fair deal. Nobody in our industry is going to retire in any one transaction. So you got to do it right by a lot of people to make the world go round. So number 11, flat out, you got to be realistic on everything. The number 12 kind of goes hand in hand there. Can we offer no point or no fee loan like any of the TV or radio ads that I hear? Of course. We can do anything that anybody else out there is offering. We're big on options. So I'm always going to go back to people with an option close. Would you rather go to this a little higher rate with a little less in fee, or this a little lower rate with a little bit more in fee? And then they're going to pick a winner. You can't go back with the option close on a listing appointment and presentation. Would you rather list with me at 3% or at 2.5%? They're going to pick 2.5% every freaking time if you're offering the same services, you know? But the reality of things on the loan side of it is we got a little bit of play. There's a little bit of negotiation as the up and down as to how they, how they want to structure their transaction, what works best for them. So we will let people make their own decisions within a controlled environment. They're going to decide which option makes most sense for them. It's not me. We've talked briefly, not briefly, we had an entire training session on this, benefits of the mortgage broker banker. So I'm not going to altogether dwell on it in this call. It is important that everybody realizes we can wear any hat we want to. So if it's in the client's best interest for me to be a broker, I'm a broker for you. If it's better for me to be the direct lender or mortgage banker, that's the hat I'm going to wear. So wherever I can get you more favorable financing is what I will pursue. And that's the role that I will play in the industry. Okay. So nobody's just getting scared and we're all treating everybody the exact same. Whatever's in their best interest is what they'll get. Number 14, do mortgage brokers charge more than going direct with the lender? The fact of the matter is the lender at any given time, if you're dealing with one size fits all, whatever spot in time that they're looking at getting the loan or locking in the rate is going to be whatever the lender's offering at that time. And quite frankly, it could be terrible. You have no idea. The broker has an ability to take a step back and look and see, hey, where is the best bang for the buck? Where are you getting the best loan? And then hand in hand, as a mortgage broker, I almost compete with myself as a mortgage banker. Is it better for me to broker it, to a lender or just fund it on our own warehouse line? Can I get a better deal for the client? So I'm literally almost competing against myself to say which is better for them, which is going to be easier and better for me to sell and get more referrals at the end of the day. The number 15, I can't afford it. With some people that are looking from a homeownership standpoint, if you're paying any reasonable money in rent, I don't know how you can afford not to be a homeowner. There's so many programs. The barriers for entry are a lot lower than they ever have been, unless you're just absolutely getting a really screaming deal, right? Room rent. And, there are some people just based on the lifestyle they've created with their jobs, with their credit, with their savings ability. I'm not going to say, some people don't work themselves right out of the housing market. It is what it is. It's always going to be that way. From the IRS's standpoint and the government standpoint, and I mentioned this to somebody I spoke to earlier this morning, also on another call, is they want everybody to be homeowners. Why are all these down payment assistance and closing cost assistance and these state programs and government programs? I think the government feels, as everybody that's in our industry, the more homeownership we have, the more property values are going to increase, the more private homeownership that there is, the crime rate's probably going to go down. Petty theft, vandalism, all that crap's going to be going down. There's probably going to be a lot safer areas because people just have more pride in what they own in comparison to, once again, just not caring about it or, heck, that's not mine. What do I care? Number 16 is not altogether so much with regards to you guys, but I do mention back to our loan officers on a regular basis that the refinance individual, they can roll their costs into the new loan. So some people on a first-time home buy have this notion like, oh, geez, I can't afford all this money and can't afford to refi. I mean, it sounds like a silly thought, but yeah, I didn't want to leave that one off the table. Not even going to address 17 with you. I addressed it with our loan officers. That's a no-brainer. I mean, we accommodate to people of all walks of life. That'd be an understatement. Number 18, will running my credit affect my credit score? I can use anybody's credit report from anywhere. If you want to show me scores from Credit Karma, you want to tell me what your date is. If you don't want me to run your credit score or credit report and you want me to work up options, I absolutely will do it for you. I'm not going to create barriers that are difficult to overcome. I'll accommodate as best as possible. If you would like to move forward and you want an approval letter, got to have the credit run in our company's name. Okay. The government, through the Fair Credit Reporting Act, allows people to shop within the same source. So anybody that's shopping for mortgage loans, it doesn't count as additional inquiries and they can shop. and it's all as one. So from the standpoint of additional, the same with car financing. You know, you're going out to 5 or 6 car dealers, then no shame on that. If every single one of them is running your credit at their cost, it's all going to count as one inquiry as you're shopping for a car loan. The number 19, and there's a lot of people interested in new builds these days, and builders are very aggressive in offering concessions towards closing costs in order to get buyers in. Who's kidding who? They want to sell homes. So, you know, are we able to compete on that level? It really, and what I would suggest to anybody, it really comes down to, when is the place going to be completed? We have somebody out of our Oceanside office that ran a buyer all the way up to Simi Valley yesterday. New tract housing. I think Warmington Homes, I think he mentioned, was the builder in Simi. But he wanted to register them. He wanted to get the foot in the door. These people, that they couldn't even take an escrow deposit because they haven't even established what the price is for phase 2 or 3 or 4 for that matter, that they've already broken ground on. So phase 1 had a locked in price. They haven't even figured out what it's going to be, nor do they even know when it's going to be completed. But they're offering $15,000 in sales concessions. That's great. You let me know when the house is going to be completed. I'll price out whatever that they're looking to accomplish. We'll go toe to toe. I can beat them or I can't. I'd love an opportunity to compete, you know, at the very least. But this early in the stage and scheme of things, I have no idea, nor do I even know if they're going to come up with a price that is acceptable for your buyer. They may come back and say, you know what, we have so much demand for our product that we're going to increase this materially, and then see who sticks on as far as who's, you know, signed up and registered to get in line to have an offer accepted, you know, and or, you know, move the process forward. But yeah, I just need to know whenever the time that they're looking for a completion date and what it is that the builder's offering at that spot in time. We're going to swing it or we're not. I've had some builders, as we're competing for it, sweep the buyer off their feet and absolutely just, I mean, I've had some clients that have from their initial quote upwards of $21,000 difference in what they're offering in fees and sales concessions, and priced us right out of it. It has happened. You know, does it happen every time? No. Okay. And from the standpoint of the clients on those, they used us as a wedge. The agent was appreciative that the client got the best deal possible. And I would hope that whenever it came to an opportunity to refinance down the road or any additional purchases that they may make, that they would keep us, you know, in the fold. But, you know, we have just another contact and, you know, another individual to put in follow-up boss and follow up on a later date. Number 20 is kind of a silly analogy, but at some points in time, we put together options for people and they actually don't even believe that we can offer it. We do take very large pride in putting together options for people and not shoot from the hip. So there is no loan officer within our company. And if it did happen, they wouldn't be here for long. It'd literally be a one and done. That's baiting and switching individuals, lowballing them to take them off the street, and sucker punching them with the reality of current market rates after the fact. We really want to pride ourselves on good business, being upfront, being truthful, and not at a point where we're conducting bad business or just telling people what they otherwise want to hear. You know, and there is a large segment of our competition that would happily do that. So from the standpoint of other people, and when the offer sounds a little bit too good to be true, you know, I would be the first one to propose to any one of our loan officers or me dealing with clients alike is I'd force the hand on that other lender. And basically I'd force the rate lock and put everything in writing, all that stuff up. And a lot of times when we force the hand, they can't produce and it'll drop right back into our lap. I'll give them the better part of a day to 2 days tops, follow back up with them. I was just following up. I pulled your file. I just want to make sure that you got handled. You got everything that you wanted from that other lender or the builder. If they come back after the next day or two and they're wavering, like, well, you know, they haven't given it in writing yet, or, you know, kind of wishy-washy. Fact of the matter is, to execute a rate lock, if I can do something and produce it, I should be able to push a button and execute it right away. This is not anything, well, if you ask for a rate lock, it should take me approximately 48 hours to execute. Not happen. There is no execution in 48 hours. It happens in real time. It'd be equivalent to a stockbroker. I like the price of the stock right now. I want to buy it or sell it. You have to move fast. I can't afford to, well, you executed it a day later and then I maybe didn't get what I otherwise wanted. We already talked about 21. 22, when it comes down to finding paperwork that people are looking for. I got to find art to there's different ways to seek information that we need. There are points in time that some people, in fairness, overstate maybe what they have or what they make. It's not uncommon, but from the standpoint of any paperwork, if they say that they have a certain amount of money in cash for closing, I'm going to push for the total that they have. If they have gift money available, I'm pushing to try to document and get everything and not, just taking somebody's word for it. I'm not issuing, we as a company are not issuing the approval letter unless we have this firmed up. I got to know what we have in certainty and not just, well, that's what they said and they thought they'd get it. We're wasting each other's time if we don't have everything dialed in and documented. So from the standpoint of anything that's out there, I used a stupid analogy with our loan officers, with people that get Social Security income. There are a lot of people that don't keep any paperwork, they get it all. Or that, I'm paperless. I don't have anything. I don't get any bank statements, but if you're paperless and you are, living, in today's current world, which is super common, then you have online everything. You can log into that. You can immediately pull the statements down. You don't even have to print anything. You can absolutely save it right on your desktop, send it to me in an email attachment. Literally to retrieve the pay stubs if you're paperless, or excuse me, the pay stubs alike or bank statements, super quick. I joked yesterday, I was mentioning about the people who get Social Security income. They get a benefits letter once a year. It hits in December of what the new upcoming year, the amount of money that they'll receive. And, I joked yesterday about somebody, I didn't get my benefits letter and what are they doing to try to get it? I wrote a letter to my congressman. It's just like, holy cow, what just happened? Are you kidding me? That it's like, you'll probably never get it. Two, it's going to take 3, 4, 5 months. It would be equivalent to, my name's Forrest Gump and I'm starting to run to Washington, D.C. to get the Social Security Administration. I should be there in, I don't know, a few weeks, a month or so. There's a ton of ways that we can retrieve and obtain info. SocialSecurity.gov website is painstakingly easy to get it straight from the source, but as with anything, if it's out there, pretty well, have a different angle. If you can't get it this way, then let's get it that way. And even income, every employer retains copies of all the income, W-2s, all that stuff. People don't have it. Some people are just organizational skills are terrible. It doesn't mean that I can't help you and get you in, to the loan or the property you're seeking. Number 23, how do I create urgency, excitement, enthusiasm, get all paperwork needed, and keep clients on the time clock? And just we as a company. So I mentioned earlier on the, so, hey, what are the current interest rates? It's a wonderful question. I love the fact that anybody would inquire about anything in our industry. It could be anything. You think property values are going up and down? Oh my God, it's wonderful that we're even talking. The fact that we're engaging people on this medium tells me that we're slow dancing. At least, there's something here. The paperwork and the urgency and excitement, until I can get everything down on paper, and you want to move forward. And most people, who's kidding who, are looking, they're online. They're looking the stats read 6, 7 months prior to really engaging on a serious level. They're already looking at properties online. They're already kicking tires long before they ever go to the car lot to buy a car. They're seeing what's out there. What does it look like? And what would this be? Most of the online sites, it's garbage information. You know it as well as I do. How many of the properties in realtor.com are still available? Not a ton. God, that was the one for me. Yeah, but once again, the quicker we can get all this in a row, when your house becomes available, we hit the ground running. Okay. I've coached, and I mentioned this briefly, but I've coached just dozens and dozens of teams. My kids this year are 20, 22, and 24. And I mean, I really enjoy it. It's great. And I would preach till I'm blue in the face about control the things you can control. And with anybody on any level, the almighty energy and enthusiasm, they're big. You might not be the best player in the world, but if you have good energy, you give it all you got, you have good enthusiasm, man, it breeds. You have the negativity that goes into it. I'm walking into a listing appointment. Just don't think I'm going to get this one. And I'm up against a heavy hitter in my area. And I already know that they have an appointment with the gorilla in the room, and I'm never going to get it. You're shooting yourself in the foot instead of exuding the positivity and excitement. Like, man, I'm getting this. I'm the one for them. I'm the best. But that whole excitement and enthusiasm to put it all together, the second that they show any level of enthusiasm, that almighty time clock, and I do not understate this at all, because it really drives a lot of my clients and our loan officers' clients as to how we are following up with people. Is they're basically setting their own time clock as to when they want to move forward, when they're going to have the paperwork into us. Here are the things that I need: the tax returns, the W-2s, or a pay stub, or bank statements, whatever it is. Do you know where these items are? Either they say yes or no. Based on your schedule, when do you think you could have them to me? They create the expectation as to when it's going to be in. Now, for me to follow up with them, the fact of the matter is, you were tired, you got into bed, I just tucked you in. I did every single thing that you're seeking. I'm just like, man, just the ease and facility. You said that you'd have everything to me by Wednesday the 22nd, by close of business. It's no shame on me for following up with them at 5:30 or 6 this evening if I have not gotten it, and asking, hey, just a quick follow-up call. I just want to see how you're progressing with the information that we need. And they may say, you know what, I've had a terrible family emergency. I'm not going to be able to get to it till this weekend. You think you could have it to me by Sunday evening? Well, I can't scan it from my house. It's going to be on Monday. No problem. If I haven't gotten it by maybe Monday, mid-afternoon, late afternoon, I'll follow up with you then. So there's no shame on us following up when they have created their own time clock. And in a really nice way, I'm going to have them basically, put themselves on the clock and create their own time frame, whatever it is that you want. If you're coming back saying, I really like this particular house, fact of the matter is, time is of the essence. So you're really excited about something. I'm excited for you also. I want to get out the proverbial pom-poms and be your best number one cheerleader. I'm on your side. Once again, it's that old adage, if you're not happy, I'm not happy. If things aren't working well for you, then at the end of the day, I'm not doing my job. But if you've created timelines for yourself, and then I stay within those timelines, I can keep you on that clock. I've had some people that come back that go through a lot of medical situations. I'm fighting a really tough battle right now. I don't know how long this is going to take. I'm going through, I'm waiting on specialists, I'm waiting on this, I'm waiting on that. You know what? Just God bless you. Personally, I'd probably be following up maybe on kind of a monthly basis. If nothing else, just pulled your file. I was thinking about you. How are you? How's things going for you these days? And just letting them talk. They're going to want to turn the corner and come back around, or they're not. But from the standpoint of seeing, what altogether is out there, I don't see property values bottoming out. I don't see property values even coming down on a material basis. So are you going to be getting, a cheaper, the exact same house for cheaper within the next calendar year? I don't see stats out there. There might be small pockets, but kind of universally, I don't see a lot of statistics that are suggesting, yeah, hold on. That $600,000 house is going to be $500,000 in a year. And from the standpoint of interest rates, tough to look in that crystal ball. So you get in, you make the best decision you can right now. And for some people, and even those proverbial first-time home buyers, I'd be the first one to suggest with anybody that works here, agents and loan officers alike, that every single person has to start somewhere. It's not the house you're going to live and die in. Get something that makes sense for you and your family, that you can let run up in value, make a little bit of money, get a good tax deduction. And, and then once it gets to a point where you've made some good money on it and you want to sell it to get the next house you like a little bit more than the first one, absolutely. I'm here for you, right? Partnering up with you from this point, on down the road, and would love an opportunity to work with you on the next one, the next one, the next one. So yeah, this notion, and a lot of first-time home buyers think everything, it as well as I do. Everything has to be perfect. Has to be just like this, has to be just that. We have programs that'll offer some rehab costs. So if we need fixer-up money, we got that in products and programs we offer. So don't feel that we can't, like, hey, what do you think about this? What do you think about that? A lot of different options. Maybe it's not the first quote that we went back to them with. Maybe it's going to be plan B, but this is the house for us. Then here's the best financing for that house. Rather than, just speaking in more generic terms, talking about just a particular purchase price. Maybe we're talking about specific features of a home, the things that really matter a lot, on one versus another. So, and then options come down to, does it make sense? Do I want to move forward? Options are prevalent. Yeah, I'm getting and I'm that Riverside County Assistance Program. I'm hearing about that, and I haven't seen I'm just reading off the chat box here real quick. Yeah, long and short is, I know that there are additional programs on the horizon for assistance money. I know that they're all going to have, I talked about that in the top piece here. They're going to have strings attached. I already know it. It's not going to be, man, I'm a real estate investor. I'm crushing it. They're all going to be first-time home buyer, primary residence only, certain income limits, certain credit limits, certain debt ratios. I get it. Been doing it long enough where, yeah, we want to make sure that it's going to the right people. And no slight on those that are real estate investors, but they're like, you know what? You already got this stuff figured out. What do you need us for? We want this money to go, to drive people and get them into home ownership and get them into the game, and get more players on the team, the home ownership team. So, if you weren't a believer in, is it a good time to buy? I don't think you'd be on the call. And that really holds true. You just got to exude that level of confidence and realizing, what we're seeing in the industry. It's a really tight home stretch. And last comment I got here is, it's a very tight predicament that the government and the Federal Reserve has right now, because they want to increase benchmark rates to decrease inflation. But yet, as they increase benchmark rates, the treasury yields are going to go down, and it's going to put more banks in jeopardy. So it's a very fine line right now. The Federal Reserve wants everything even Steven, very small changes, no big swings in the economy, steady as you go. So there's a lot of effort. If they need to have, special meetings that don't fit into the standard schedule and calendar, they'll do it. But at present right now, I think that after the bank failures last weekend, everything in the financial community felt that the Fed was going to go 0.25% today instead of the 3/4 expectation, which is exactly what rolled in. So feel good about the fact that market rates have settled a little bit, that they're already built into the pricing we're seeing. I put my contact information on the bottom of that handout. You can call me anytime. Bounce anything. If I can help you, as always, absolutely happy to help. But we are here for you. Not alone. Everybody, the most people I talk to feel that, I get all the difficult deals. I have all the problem clients. It's not the case. People like me and Robert, we're dealing with folks for a living, that work with us and within our brokerage. You are not alone. You are not on an island. Just a matter of just, keeping your wits about you and just realizing that, hey, we got to overcome whatever objection they're giving us, whatever they're, presenting to us, that I just got to be able to accommodate your particular needs and make you feel good about yourself and feel good about me along the way. So concludes today's enjoyable ride. Thank you, Jake.
Great. Could I ask a question, Greg?
Okay.
Do you ever quote people a range of rates or median rate?
Yeah,
Or
you
do you
know,
just say that
it's
bet higher than
literally
yesterday?
equivalent to you coming. It's equivalent to you coming in to buy a home, and they've identified the home, and you say, yeah, that home could be anywhere between like 300 and 400,000. Not really what I was looking for. Are you coming onto the car lot and like, well, no, so the whole range, I'm not saying that there's not a range, but I think for most folks is that's great that here's the lowest and here's the highest. But for most people out there is, what about me? What about this guy that matters the most to me? What does this guy get? So as much as this other person paid this or that other person got that, whoopee. This other person got a screaming deal when they purchased a home. But what is it like? How does everything affect me? And I think for most people, when you create quotes that are specific to them, the information on a lot of these real estate sites, it's all generic. We were working last weekend with buyers, and in the internet site had an interest rate qual rate at 7. The house was too expensive for them. Clients didn't like it. I priced the example, I'm at 6.25. Well, why does that say 7? Because it's not real-time pricing. They're not asking you all of your questions. They're not asking you what your credit score is. They're just giving you, bam, if the rate was 7, here's what the payment would be. But you qualify for better than that. So why would you punish yourself and look at a payment associated with the rate that doesn't pertain to you? You're better than that. You qualify for better. Get the better. If you walked onto the car lot and they offered you 0% financing for the car you wanted, you're not going to turn around and be like, you know what? Toyota Motor Credit, I'd feel a lot more comfortable if I could at least pay you 3 or 4% interest on the loan. I want to make sure that you're making your money. I understand there's a cost that goes into it. I feel just a little bit better about myself. You're not walking onto the car lot and they have a $20,000 sticker price and you come back and like, you know what? I'll give you 30. I like you guys. You do a great job here. Every time I come by, all the helium balloons are so colorful and things are just so wonderful. And that bounce house for the kids you have on the weekends, it just warms my heart. I want to add more. No, nobody's doing that. Everybody wants the best of the best for them, which I get, as do I. So every quote that we're giving, if it's more razor sharp, it's that proverbial, the scope on a rifle to pinpoint the target exactly to what we want, pinpoint, in comparison to the shotgun blast that goes like just a gazillion different directions. We want to be the scope. We want to be the one that really gets into, here's what's better suited for you. And then your buying power and your comfortability moving forward is infinitely greater when I know where I stand. What is it? What's in it for me? And I hate to suggest that, oh, you're so conceited, or you're like, every buyer is. Yeah, I want the best for you too. So I would never quote a range in rates. Any other questions or comments? Yeah.
Sell trust.
And absolutely. And if you want any, I'm happy to help on any level. There are times that I'll do a quick, pre-qualifying call. I'll sign the deal out, to another. I'm happy to quote people quickly, keep it very easy, painless, no commitment up front, no cost up front, no credit report up front. I can have a good quality conversation with anybody in about 3 minutes to 4 minutes tops. I can put together programs within 5 minutes. Bam. Here's everything for what you're seeking. As long as you were upfront and truthful with me, is your score going to stick? We have a real estate investor here in Southern California that went back to one of our agents and loan officers that wanted to buy out of state. I want to buy units. I want to buy units in North Carolina. Man, I'm a player. Woo! And I 700 credit score. We ran the credit 507 was the mid score. That's a lot different than 700. So everything that we created at the 700 score is not going to stick, but it's not shame on us. And it's going to be a lot more difficult for them to get where they want to go with the 507. So now it comes down to, you're going to be in a hard money loan, or we need to start working on your credit profile to get your score up so you can get better terms for financing. And that's really it. All right. I appreciate you guys.
Thanks, Greg.
I'm chiming out. You bet.
Good stuff, Greg, as always.
Thank you, Robert.
Thank you, sir. I didn't do anything.
Man, you the man. Heavy
Yeah.
lifting.
All right, good job, everybody. Okay, we still have a lot more fun to do today. So what do we have going on our open mic? We got Robert, Frank, Christina, Laura, Barry. Jam-packed afternoon of open mic, people doing prospecting. Stick around, have some fun. Put some wins in the chat box. Let's go. Robert, the floor is yours, sir.
Thank you, Robert. All right, let's make some money.